Yet another massive signal has just triggered on the US stock markets, which is a signal for our Bitcoin macro cycle. The market's leading into massive peaks later this decade. Not this year, possibly not even next year, but maybe even the year after that. This could be one of the biggest cycles that you experience in your lifetime. And I don't say that lightly as we enter the final stages of the 18.6 year cycle. So if you have been following the channel, which I suggest you do, hit that like and subscribe button. We're the only ones here on YouTube talking about the 18.6 year cycle in a macro sense, looking at the stock markets, the real estate cycle, and of course, our favorite picks, Bitcoin and cryptocurrencies. The reason for this is that we need to understand the global picture that's going on out there, the signals that have been hitting the mark time and time again, as we've been covering them for the last several years here on the channel, and how this is all unfolding in real time with the majority missing out on these huge signals. Now, if you guys have been following, thank you very much. You've probably seen this play out already in front of your own eyes, but if you are new, do hit that like and subscribe button. So we've got those massive signals to cover today, plus plenty of other updates looking at the Nasdaq hitting new fresh all-time high prices. The S&P has hit a new fresh all-time high prices. What this means for Bitcoin, as maybe you have been following us, looking at what this looks like for Bitcoin in the coming months, leading into the halving, and then what happens after that point. Maybe you got a little bit an insight so far, but it is not going to be an easy ride into that point, as you may have already started to experience. Now, guys, this is your home of macro cycle analysis. It's our 3rd year birthday for TIA crypto, for TIA Premium. So hit the link in the top of the video description. There is a sale happening very soon. Name, email address, and you will be notified when that sale goes live. It's our 3rd birthday sale for TIA Premium. And if you've been a member for that entire period, well done. You've seen how this market has played out over the last few years, coming from the depths of the COVID crash to where we currently sit and where we will finally end up before a mega collapse, possibly around the globe in many assets. And I don't think Bitcoin is going to survive that one like many expect, but we're going to take it one step at a time because we have the mania to come, the big bull market, the final one before we get the collapse, where we may have multi-year bear markets before we go on our next runs. So it's not over forever, but I suspect it will be over for a considerable amount of time compared to what we have experienced over the last 14 or so years for Bitcoin. So let's start with the big picture and then get down onto the massive signals that have just flashed, the new all-time high for the SPX and what that means, and basically how that turns up on the Bitcoin chart, what happens to BTC. So earlier on, I put out my 13 forecast for 2024. This was a little while ago now. I just want to look at a couple of the major ones for the US stock market so we can move on to the next stages because when this signal happens, it's not an easy ride for BTC. It's basically not straight up. It's not what they've all told us about the ETF and it all pumping and it's roses. And now they're telling us the halving, it's all going to pump from that point. Typically, we will see a correction for BTC. Now, that correction, I don't expect it to trade under 25 grand. I don't expect it to go under sort of 32,000. I think somewhere around the mid 30s is going to be a reasonable area for Bitcoin if it gets there. Right now, the lowest it's gone is roughly 40,600. Now, by the end of the year, Bitcoin will close higher than it opened. I suspect it'll close higher than 42,000. Right now, Bitcoin is trading at 41,300 and it just closed another week underneath the 50% level, which you guys know is an extremely important level for Bitcoin in these early stages, the earlier stage before the mania. So we're basically 14 months in from the cycle bottom, which was November 2022. Remember that. But we're still not into that mania stage of BTC yet, even though we have just seen this signal play out for the SPX. Okay, so let's hit on to the next stage of the analysis. So looking at Bitcoin, what's going on now because of the signal and what happens later. The US stock markets won't trade below their October 2023 lows. That is right here. So I've talked about that. I don't expect them to trade below that. And as for the Nasdaq, I pointed that out a long time ago. You guys saw it. If you're not following, do so. Okay, so high low probably won't be broken. And from the point of this video where we looked at the everything bull market, basically everything blowing up in the next couple of years, booming, and then collapsing from that point. So we've got a nice big boom on our hands, and it is playing out right now in front of our very eyes, but most still don't want to believe it. From that particular video there, 8th of December, the Nasdaq is now up about 8% from that video. Remember what they were telling us at that point as well, even though we're getting very close, that the market had to collapse from that point again. And it goes on and on and on. The recession is coming. There's going to be a recession in 2024, in the second half of 2024. This sort of talk will continue on. There's going to be a big blow off top and then a correction. It's garbage. It's been wrong for years, and they've been talking about it for years as well. The reason for it is this cycle here. We will get to that point and then have that collapse. But right now, we're still in the midst of probably one of the major final stages to be making money on the way up before we get that collapse. So that's where the Nasdaq sits. We've just hit new fresh highs as well. So we have to extend this up to 17,500 points. The previous all-time high was 16,700. So we've gone a fair amount away above that old all-time high. So it's all playing in to the analysis for this stage of the bull market. The market's moving into new all-time highs. So that leads us to the next fearful topic. And what these fearful topics are essentially new bricks in the wall of worry. The next one that we are potentially seeing is the new all-time high wall of worry. When markets hit new all-time highs, they must collapse because they have done that every single other time in history. Remember to go back to the data and have a look at when these things actually occur and what is left in the movement. Now, of course, it is true in some cases because there are no guarantees and there are no 100% hit rates on anything eventually when you get enough data points, meaning that markets can hit a new all-time high price and then have a pullback, or they could hit a new all-time high price and have a very significant correction. And typically what's pointed to when that happens is 2007, so the global financial crisis. The market's basically, for the SPX anyway, the SP500, the biggest one in the US, ran up to a new all-time high, and then very quickly after that point, started to correct, and then it had the collapse to the GFC. So, as the bears like to point out, one of those times that the signal came up was May 2007. So it's not incorrect that when a market does hit a new all-time high, there is the possibility of it correcting to a large correction. But remember what we're doing. We are looking at the probabilities. The probabilities are that it's not likely the market would collapse the first time it hits a new all-time high. Look at 2013, ran into a new all-time high and it kept going for another couple of years. The correction was very minor. Then you had another new all-time high in about 2016 at around the election. Think about that. The election market went ballistic, ran up again from that point. We had a correction in 2018. Right now it doesn't look very big, but it was a very big emotional period in 2018. And Bitcoin also had a pullback in 2018. So a pretty big move for BTC at that time. Then we had the COVID drop. And from that drop, well, the markets went ballistic in 2021. So we've got plenty of data points here. You've got 12-month returns. There were 13 data points. 92% of the time, they were positive. And they were typically around the average price, sometimes even higher than the average of the returns for that year. So that is a good thing for Bitcoin. But we have to separate these two things now. There could be a short-term correction in a macro cycle. Think about what we have already experienced. We had a top in July. We had a correction, very significant correction for the time into October. And now the market is well and truly beyond that and pushed to new, fresh, all-time high prices. So the potential trouble that forms from this, if there is a correction, of course, or a significant correction, is that many will start to scream for the doors and look to the global financial crisis again, saying this is what happened once all the way back here, forgetting that, well, there was an all-time high in the late 80s, markets kept running up, another all-time high in the 90s, markets kept running up, plenty of all-time highs where the market still had at least 12 months left in it, even though you had some terrible high inflation periods in the 60s and 70s, which is also referenced. So those periods through the 60s and 70s also had fresh highs, markets ran up, kept going, then the correction, then they had an all-time high, ran up, and then had the correction, and then eventually kept going up after that point. So these will all be referenced, but remember where we currently sit in the macro cycle. We still have a couple of years away from these particular peaks. Now, the everything bull market is everything. Bitcoin, cryptos, real estate, stock markets. Some of the reasons which we continue to cover on videos here on the channel for the real estate prices going up, even though inflation is high, even though interest rates are high, even though people seem to be running out of money, even though the data shows that they are not, wherever the money is coming from. There are many things that the government is doing to screw with the cycle and, in fact, continue to push the prices up. Here is one thing for you guys in the UK. Government considering a radical scheme to help first-time buyers by backing mortgages which would require just 1% deposits. Think about this. This is the everything bull market, and this is going to help the S&P climb. It's going to help Bitcoin climb. It's basically everything together where the governments are doing all they can to push more money into the markets. If you only have to put 1% down, the government will back the rest of that deposit, or allow it to open up where you only need 1% and the bank will cover the rest of that deposit. What do you think that means to the prices? New buyers are going to be running out in droves to try and secure their property with 1% down. What happens when you have more demand into the market and less supply, or the same supply? Prices go up. It's a simple supply and demand, and the majority don't see simple things like this as a problem. They see it as a fix to the problem, but in fact, it actually exacerbates the problem of higher prices. And we're going to continue to see that over the coming years. The same thing that we've been talking about for years here on the channel. To the SPX and how this move into a new all-time high price. The thing that just happened is a positive for BTC in the long term, although, like we've looked at before, this signal could cause a pause or correction for Bitcoin. And we're potentially seeing that right now. In January, you can see this nice big reversal. Your doji here forming on the monthly, now down to 10 days to go in the month for BTC. And I suspect if we do get that close under $42,000, that could at least pause the prices here in the face of all of the BS that happened over the last few weeks with the ETF announcements. So even though everyone is super bullish long term, they were super bullish at the peaks. Unfortunately for the masses who got in at the peaks, which we can see from the volume on the chart with a lot of buying activity coming into the market at the peak, they're going to have to wait that little while longer to see any sort of returns on their investment. So here we are, the massive signal. The S&P has reached a new fresh all-time high price, 4842, so 4,842 points. The previous all-time high was 4,818 points. So we have exceeded that now, the first time since early 2022, so basically dead on 2 years. Now, the last times this had happened were through the accumulation period, and I've pointed out before what the accumulation period is. Essentially, it's from the Bitcoin low to when Bitcoin breaks out to a new all-time high. That's that following month, and I'm just using that as it's a nice clean way to identify those areas. Now, within the Bitcoin accumulation, so that period where Bitcoin is basically underneath its previous old all-time high, the S&P has hit a new fresh all-time high twice. You can see it hits an all-time high, has a correction, hits another. We just got the balloons again. It must be the peace sign. Okay, so the S&P hits a new all-time high, corrects, and then hits another fresh all-time high. And when that happens, Bitcoin's mega bull market goes ballistic. And typically at that time, it's going to be more beneficial to be investing in altcoins, or basically trading altcoins. You don't want to hold these things long term, because at the end of the day, they're all shit coins and they're basically all going to go to crap. Sorry if that offends you, but just look at the previous 3 cycles now. The majority of it has gone to crap. Looking at this signal, we can see from the first cycle going back into 2012 into 2013, the S&P ran into a new fresh high, corrected, and then tested that new fresh high again, corrected, and then it ran into its bull market for the S&P, and Bitcoin also followed in 2013. We all should know by now that Bitcoin had a stellar bull market in 2013, running from, we had the cycle bottom here around 1 cent in 2010 into that peak of 2013, about $1,200. So that was the first massive cycle there. Then we had the cycle from 2015 into 2017. So that was that bull market from the low to the top. So another solid 3 or so years in that movement. So 15, 16, 17, and then 19, 20, 21. So far we're sitting at the bottom in November 2022. We had the whole year of 2023, potentially also 2024, and then 2025. So potentially into that peak sometime in late 2025. So that was that first cycle. The next cycle, is it true again for the Bitcoin accumulation and the S&P hitting a new fresh high, or now new all-time highs? Well, you had it first hit in February 2015. And then from that point, Bitcoin in 2015 did go on a pause here. So we're looking for a Bitcoin correction or pause. Basically, prices stop moving for a considerable amount of time. And from that 2015, March, there was the peak there and the price went sideways for several months from that point. Now, the next one to have a look at is 2019. There is your first all-time high in April. So we know Bitcoin ran up from April, that was the breakout, to May and June, and then went on a bit of a pause. So what does that look like for the price of the S&P? Well, it also hit a fresh high and then it paused as well. And it wasn't until later in the cycle of the accumulation that it really went on for another fresh run to a new all-time high. Then that triggered the next bull market. And that was the craziness that everything was going up at that time in 2021. Real estate, Bitcoin and cryptos, and the stock markets. What can we expect from this point forward for Bitcoin and cryptos? Well, we looked at a pause or a correction. Now we've got our 50% tool to this current peak of $49,000. Halfway through that level is about $37,000. So from where the price currently sits at $41,300, a correction of about 10, 11% to that 50% level seems pretty reasonable. I don't think that's going to shock too many. It doesn't seem like a massive pullback at this stage, but if you measured it from the peak to the 50% level, it's about 24, 25%, which is bigger than anything that it's done previously in this current bull market cycle in that first stage. I consider we're now in that second stage, but still roughly around that sort of mid 20% corrections. Could it go further? Sure. And if it does, let's measure out those as well. Down to the tops there is about 35%. So that's about $32,000 and a 35% correction. So I think that would be on the extreme end of Bitcoin correcting, which means that it might be unlikely that it gets there. Not impossible, but unlikely. And if you're trying to play the game of scooping up Bitcoin at unlikely prices, then you're gonna miss out. You're gonna play the same game that the fools all played when they were waiting for Bitcoin to correct back down to $15,000 or even lower, like 12,000. And the fools who were calling for 9,000 and 10,000, and unfortunately the masses were following them then. So they missed out there. Then they missed out again at 25K because they were expecting Bitcoin to go below 20,000. It didn't happen. So all I'm saying here is maybe have a few Hail Marys at that price, but look to something that is a little more reasonable for an entry if you're not in already. And if it gets there and goes a little further, that's okay too. This is trading and investing. We don't know for sure what's on the black side here. We don't know for sure what's on the right-hand side of the chart. All we're trying to do is be detectives and figure out where the best strategy is for that right-hand side of the chart. So we still have two massive events coming up this year, the halving, and which I think is even bigger than the halving, is going to be the election. What we've seen from the election is when the markets go ballistic. Sometimes a month or two earlier, sometimes right on that period. So stay alert coming into Q3 of 2024. Yes, we have the halving coming up in a few months' time. That could be enough to at least pause the market and stop any sort of correction if we see anything further from that point. So yes, this next couple of months, we're basically on the lookout for more entry opportunities. And like we've known leading into this year of 2024, that it's probably more likely going to be a better altcoin opportunity for the next stage of the cycle. So Bitcoin is going to have gains. I suspect Ethereum will have gains, but obviously those cryptos are going to have even bigger gains. That should be a given by now. Just thought I would mention it again at the end here as we move into looking at the correction. And basically, quick update of the Wyckoff schematic. Since we did the update last week, the market has tested the low a little further, slight bounce, and now it is trying, well, it looks like it wants to push down again and test these lower prices in the mid $40,000 region. So if that's the case, well, we've got to keep a lookout for 40,200 now, which was the current low. And then if we get any sort of bounces from there, which could cause another last point of supply, then just look to the upside and look to those 50% levels for any sort of rally and potential rejection at that point. So we haven't broken down from that $40,000 level yet. Maybe we don't, but just to be on the lookout for any sort of rally, rejection, and then correction from that point. So should we get a correction on BTC, we know the levels to look at to the downside, roughly 37,000, about 10% away from this point here. And we could continue to look a little further down to the previous lows. As we've been talking about, somewhere in the mid to high 30,000 seems like a reasonable area for the market to correct and then continue on for that massive bull market. Doesn't mean it happens overnight. It doesn't mean it happens as we hit the dead day of the halving. It doesn't mean it has to happen at that exact point. The main thing is to follow the chart and watch what's going on in the chart and not get too carried away with these sorts of nonsense, BS, jargon crap that spreads over Twitter. Which leads me to today's question. The question is pinned in the top of the comments. Do you follow crypto Twitter, Bitcoin Twitter, or crypto Bitcoin YouTube, or both? I want to hear from you guys down below. This stuff is so prevalent on Twitter and it just gets people hyped up, and you see it on Bitcoin crypto videos as well. It's just numbers multiplied by other numbers multiplied by other percentages to give you some sort of ridiculous target. And some will say, well, it's maths, it should work. Sure, you can make up these numbers and say anything should work, but at the end of the day, if you get sucked into this, well, the same thing will happen to what happened to those people in 2021, where they thought Bitcoin was going to 300 or 500,000 because Cathie Wood said so. So that's my reply. Let me know your reply in the pinned comments down below, and get on board with the 3rd birthday special for TIA Premium. Link in the top of the video description for the email list. I'll see you guys at the next video. Until then, take care. Have more fun to get more done. Look at that. Brilliant. See you guys.